My view is that probably there's going to be a lot more volatility. I mean, there's lots of economic data coming out that gives you an idea of how the economies are performing. You'll get a mix of good news and bad news. The earnings season is continuing, although we are at the tail end of the earnings season. You've also got the US. In the US, you've got COVID-19 figures still going up, and the big uncertainty about whether the Democrats and Republicans will strike a deal as far as additional fiscal stimulus is concerned. US-China tension, and the list goes on. So I think the month of August is going to be another volatile month, a very volatile month, and investors have to brace themselves for very choppy markets.
Oh, yes, indeed. So if you're saying that the month would be volatile, how would you position your bets right now? What are you advising clients to do? Take on risk or build more positions with the defensives?
Well, essentially, our view is that investors should stay invested, despite the fact that, there are uncertainties in the horizon, the markets are choppy. Investors should stay invested, but invest very carefully. Our asset allocation calls are largely neutral for most asset classes, with the exception of emerging market high yield bonds. And when we say neutral, we're not underweight, so we're not negative. Neither are we terribly positive, because valuations are stretched to some extent at this juncture if you look at price to earnings ratio. So our strategy really would be to drip feed into the markets. In other words, to buy gradually, dollar cost average, not try and time the markets, and stay very diversified across asset classes and sectors. Because I think there are too many uncertainties right now to make any strong conviction calls at this juncture. But we still think that all this liquidity on the sidelines, ultra low interest rates, strong support from central banks, possibly also strong support from governments in terms of fiscal policy, all that should provide a backstop. And if we have positive news on the vaccine front, that's going to spur markets even higher. So investors cannot stay out, but neither should they be trying to time the markets too actively. Best strategy is really to dollar cost average, gradually incremental buying over the next few months.